What's going on, guys? Brian's here. Today's Thursday, September 16th, 2021, and I'm super excited about sharing the contents of this video, as I think it will significantly improve the skills of any trader, especially if you're in the beginner or intermediate phases. Before we get to the real secret of this video, I will be talking about volume profile. I'm going to have a more introductory level video for volume profile if you've never seen it or if this is your first time being exposed to it. But understand, part of the secret of this video is about the volume profile. It's just going to be a cleaner, more simplified way of interpreting how to read it. But even if you've never seen the volume profile or don't even know what it is, I promise you that this video will still help you and you can use it in your trading probably as early as tomorrow without even fully comprehending all the ins and outs of it. There is a link in the description down below with a custom TOS study that I'm sharing for free. Thinkorswim does have a built-in volume profile indicator, but I customized it and made it match the platform that I use for futures trading, which is NinjaTrader. Now, if you're not a futures trader, also don't worry about it. The volume profile is something that can be used on stocks and options. Anything that has price and anything that has volume is where the volume profile can come into play. So without much further ado, let's jump straight into it. What we're looking at is the SPY right here, and we're dealing with, a little bit of a pullback from the all-time highs, and we're in this consolidation period. So we have a lot of even volume right here if we're just looking at a traditional volume indicator. And to most experienced traders, volume is probably the top ranked indicator you can have on your chart. However, when we see prices being so balanced as well as volume is being balanced, it gets a little bit harder to understand or use it as an edge. Let's switch over to the ES, and the reason we're going to be looking at the futures, so instead of looking at the S&P 500 ETF, we're just going to switch over and look at the S&P 500 futures. The reason most people like to look at the futures when you're using the volume profile is because the futures run pretty much for the most part round the clock 24/7, which means there's always a flow of volume, there's always contracts being traded, and there's very few gaps on the chart, which means we get trading overnight versus on the SPY, there's usually gaps and we see gaps in volume and things like that. Just looking at this right here, we can already see there's a big difference in the volume when we look at this chart on the traditional volume indicator versus the SPY. But again, if you're not a futures trader, don't worry, there's a lot of edge in understanding what I'm sharing in this video. A couple days ago on my Instagram stories, I went on before the market opened and I actually was talking about this picture right here. And I was talking about how we had in the volume profile, which is now we're looking at a chart that has the volume profile on. This is a screenshot from NinjaTrader. I highlighted the blue area intentionally, and the blue area is what's known as the value area. The value area for me is where 68% of all the volume traded on that day. Some people use 70%. I like to use 68% because that's one standard deviation of all the volume. And all that's saying is it means 68% of all the volume on this day. So we have this vertical line right here is showing the separations between each day, and the blue rectangle is showing where one standard deviation, so 68% of all the volume was traded. Why this is important is because, as we can see, price is not as significant when compared to where is the value. In the introductory beginner version of this video, I'll get a little bit more in depth in this, but to speed this video along right now, just understand that's what's going on here. What I then did is I like to highlight to show that this is an increase in value. And then on September 7th, we had the first real gap down in value. And this is where we closed. And this is where the value remained for that day. That was something that was a little bit different from what we had been seeing as the market had been rallying for the past month. And then we had a constant decrease in the value area each day. Now, what I had mentioned is I was expecting that day to be some sort of a shift in the value area. So I was expecting the value area to be something like this, or to end up being something like this. But all I was saying is that we want to see a shift in the value increasing. We don't necessarily need price to close higher, because if we look at the candlestick charts, sometimes price can close higher and then the next day we can still pull back, and it seems like it's bizarre or it's random or it's weird, but usually price is just coming back to an area of value from a previous couple days. If you don't know where that area of value is, this just seems to be like an annoying sell-off and it gets a little bit frustrating to trade. Now, if you know where the value areas are, you can actually be prepared. But more importantly, in the value area, there's something called a point of control. And that's what these yellow lines are right here. The point of control is where there was the highest concentration of volume at that specific price. So you see right here, this yellow, orange, gold line that I have extended out right here is saying that this was the point of control for that day, this was the point of control for that day, and so forth and so forth. This information right off the back, I'll let you guys know you can take some monster trades just using this. If I just scroll up for a couple slides back here, I was just saying we knew the exact level to get short because this was the point of control from this consolidation period, and this is actually where I entered a short on the futures right here, and then I actually closed the trade. So this was my short right here. So I'm just jumping a little bit ahead, let you guys know I use this to trade this way. So I entered in 2 short contracts here. I actually closed out one of them here today, and the reasons for why I closed it is if we jump straight to this chart, let's go now to a smaller time frame, and we can see this is what the volume profile looks like. So the indicator in the description down below will allow you guys to see exactly what I see, or what most people see on other platforms that trade futures, where you're looking at the 30-minute time frame. Without getting into much explanation on that, the 30-minute time frame is something that was adopted from any futures traders that use the market profile. Market profile is different from the volume profile, but the two of those are used in conjunction with most full-time futures traders, and everything is based on the 30-minute time frame. But if we continue right along, we can see the same thing here. This was the decrease in the value each day, decrease in the value, decrease in the value, decrease in the value. And this was the first time we had the increase in value. And as you guys can see, price rallied here for this day, but the point of control was still down here, and the point of control from the previous day was down here. So today we had this annoying sell-off that happened overnight, and as the market opened, we sold all the way off, but we just came right back to this concentration of volume. I like to look at the 2 point of controls combined and try to draw out a demand zone based on that. But this was my reason for closing half of the short trade, because this is where I entered my short on this pullback right here. And then once the value area shifted, I interpreted this as strength is starting to return to the market. I don't know, no one knows if this is the exact bottom, but I want to take some risk off of the short in which I had opened, because now I'm seeing a shift in value. Anyone that's reading the futures chart and looking at the profile is able to interpret this, and they can start building long positions, or they can start putting risk back on, expecting the market to push back up this way, because at this point the risk is so small getting long down here. Having a stop loss below here, you're potentially risking maybe 10-20 points to get who knows how big of a move. We're talking anywhere from 50 to 100 points back up to the top, depending on where you take your profit, which would be a 5-to-1 or a 10-to-1 from a risk reward perspective. But the trading aside, the first secret in the thought behind this is that right here, guys. Understand the shift in value. You guys can see this. It's very simple, and this is what I was saying. If you're not a full-fledged, well-developed trader yet or anything like that, just look at these blue boxes after you've installed the TOS script into your charts and follow along with me. Depending on whenever you're watching this video, this is a timeless thinking, so don't worry even if you're watching this video 6 months from now, 2 years from now. The logic and the thought process behind this will always hold true. In other videos, I'll dive a little bit deeper into the psychology behind it and why it's happening. Zooming out for a second, we're looking at the hourly chart. Again, the volume profile is not going to be affected by the time frame in which you're looking at it. I just started with the 30-minute time frame because I was referencing the market profile also, but you can look at this, you can use this TOS study on any time frame. It's going to be the same because it's pretty much aggregating all of the data for that whole day. But what we're looking at now on this hourly chart, the reason I pulled this up is because I want you guys to understand something that's not often mentioned, and it's the only way you can know this is from looking at the volume profile. Whenever we have a point of control like this that price has not returned to, this is what's called a virgin point of control. So you can say VPOC or virgin point of control. Sometimes I say naked point of control. There's different ways to call it, but in a sense, VPOC I'm going to be referring to for the rest of this video a virgin point of control. So prior to today's price action, this was our virgin point of control, and as we can see, price came right down to it because the virgin point of control is usually always going to want to be tested again, if not the following day or someday in the future, because we can think of this as confirmation of the direction of the move. And the market wants to be sure before it pushes higher. Most buyers want to be sure that this rally yesterday was was a real rally. If we continue to rally and then we never came back to this point of control right here, it tends to make buyers become a little bit nervous. But whenever we get a pullback to the previous day's point of control or any previous virgin point of control, it becomes confirmation that there are real buyers in the market and they're going to try and defend this level as they push price higher. So if we look here back to this day, this is not a virgin point of control because the following day price did touch this level. The custom thinkorswim study, there's no way for me to build this to actually, at least to my knowledge, to have it manually extend out the virgin points of control. So what you guys can do whenever you're analyzing your charts is go and try to find any points of control that have not been touched. And as you guys can see what I just did here, I'm looking at this level because price did not quite come up to it. We don't necessarily have to consider this a virgin point of control because price did come pretty close to it. However, if price was to rally, that's probably more than likely if we got past any of this traditional resistance levels. That's most likely where we're going to meet the first block of real sellers are going to be at this level because it was such a strong concentration of volume at this level. Now in the value areas, we have the value area high, which would be right here, and we have the value area low, and then we have the point of control. If we group all these things together, these will end up being our supply and demand zones. If you're used to drawing supply and demand on your charts and you trade off of those, make sure to incorporate using this volume profile study whenever you're drawing out your levels because you'll see it'll significantly help you spot zones. If I were to just zoom out right here and we come to this level, you guys can see right here, this was the previous value area, right? This is an area that was untested, and if I draw this out right here, we actually change the color, we can make it green. As you guys can already see, this was a strong demand zone. As price sold off, it came back to this level, and then the buyers defended it right here. So that came straight from understanding this was the value area and this is where price came back up to. So now the same thing, this area right here, this whole block right here, there's probably going to be a ton of supply between 4,500 on the ES and 4,520. If the ES somehow sold off and it got below this demand zone, the demand zone would become invalid, and the next level that we'd probably want to pay attention to would be this point of control here all the way down to this right here, and this could be considered the next potential demand zone. After zooming out, let's scroll back in time and try to see if we can point some stuff out here. So this level right here will probably end up being a very strong support level in the future. And if we were to draw this out as a demand zone right here, let's actually just zoom out one more time, copy this over, duplicate this, bring this right here, and what I'm trying to do is pretty much cover the entire value area for that day, and this is going to be our next really strong demand zone if the market did end up selling all the way down here. Now whenever the market looks like it's going to push higher, any market for that matter, take a look at this right here. Here are our points of controls. As we can see, decreasing. We have this gap down, but then we ultimately had this gap up. Price just seems to just skyrocket. Look at where we end up closing up here, but not only was it a close over the previous all-time high, but the volume profile also confirmed this. We had the point of control was higher than this right here. This was a good sign, and you guys can see price continued to hold this area as we drifted a little bit higher. Same thing here, when we pushed over the all-time high, we had the point of control actually higher than the previous all-time high, as buyers were still being aggressive, pushing price higher. As we continue to scroll over and look at this consolidation period here, we had another push up in the point of control, slight decrease. Small nominal changes like this are not as significant. We can see increase, pretty much neutral, increase, and then this is where we had the first real big drop. But what was significant about this drop is that this point of control was below the point of control for this whole consolidation period here, and that was the first sign to me for where I started becoming a little bit more bearish on the market, even if it's just short term. The swing trade lasted 6 days, but this was the trigger right here, the fact that this happened. So the next step was to find the point of control for this whole consolidation period, and it ended up being right about here, and that's why I chose this as my place to enter the short trade. Let's jump to some other charts for a second. Just going to spend a couple seconds on the NASDAQ and want you guys to pay attention to this right here. So as we can see, the NASDAQ, a little bit of a balance area down here, A little bit of a balance area down here, but just like the ES, we had this shift up in the value area. So now I'm long the Nasdaq. I'm feeling comfortable about the position. Stop loss at this point is break even, but I want to see if we can get back up to this point of control here. If we take a look at where the Nasdaq actually stopped, here was this point of control from back here. And if we were to draw out our demand zones, we can use this whole, let's scroll back here. We can say from here, this one's pretty wide, but let's just say from here, we can go from about this, the bottom of this value area here, to the top end of there and stop right here. So you guys can see this is 3 days. It's a decent amount of time for price to be consolidating, enough time for the volume profile to really develop. Here's our points of control from these 3 days, and here's this point of control here. You guys can see once we had this sell-off, we came right down to this point of control. And even this point of control up here, you guys can see how it ended up balancing out before we broke down and sold off to this point of control. So guys, I'm just showing you guys a few examples. I'm going to have a lot more videos on this. Expect to see a lot of the point of controls in my videos. Some of my earlier videos, I used to talk a lot about the volume point of control on the futures in NinjaTrader, but with this study, it'll be a lot easier for me to share some of the charts and really help you guys when interpreting or reading this, certain things to look out for, certain red flags. Pretty much I'm always just trying to pay attention to what's going on with the value areas. Decrease in value areas is always a bad sign. If you see small changes in it, it's not significant, but when you see shifts like this now starting to happen in the value area, that's considered a good sign. But just know, if this was to break down, we're going to have to find the next place of value. And to wrap up this video, I want to show you guys a few tickers real quick, just a couple actually, because I don't want this video to be too long. And right here, how you can use this for individual tickers. What we're looking at is Tesla. So here goes a balancing area of Tesla. We had 4 days of consolidation. If we were to draw our box around, we'll say these 3 days of consolidation right here. This is pretty much covering the previous day also. You guys can see we have this demand zone that would have formed. On top of that, let's take our previous virgin point of control and extend it out. And what I like to do whenever I'm editing my charts, I will put in this so I know it's a VPOC for virgin point of control. I like to make it the gold color, and then we can put this here, mark this off as our demand zone. Let's just adjust the color for a second and lower the opacity, and there we go. So strong demand zone, virgin point of control. Now this is no longer a virgin point of control once it gets touched, so I usually remove the V. I even had another system where I would say how many times points of controls have been touched. I would put 1x, 2x, 3x, things like that. Once a point of control has been touched more than 3 times, I pretty much just erase it because it's not going to be as significant. In my opinion, virgin points of controls are much more powerful than points of controls that have been touched a million times. But you guys can see Tesla did push up, and where did we come? Right back down. It almost made no sense on this day actually how crazy, or these 2 days, this was a Friday into Monday, how fast it came back down here. But this is the area in which you want to be buying. So now if you're looking to be a buyer of Tesla again, in this balance area starts happening, let's just say we get some sort of breakdown in Tesla, this area is probably going to be defended because we can see that how much demand there was that was building up back here. We have confirmation in these points of controls, and we can see how fast or how aggressive the rejection, we can see how fast the rejection came off of the level right here. If we dial into a smaller time frame, which is usually again the 30-minute time frame, we can see it even clearer right here. Let me just remove this. You guys can see this here. I mean, I'm hoping this video is bringing to light something that you have not thought to do before, but you can really narrow it down like this and just use the last, not only the virgin point of control, but you can use that virgin value area, and then you guys can see how you can really get a more pinpoint place. But that's more so if you're day trading. If you're swing trading, you can keep it a little bit wider. Similar situation like this. If we were to draw the value area around this, because at one point this was a virgin point of control right here, price did slice right through it, but we did ultimately come right back down to this previous point of control. If we were to dive into a smaller time frame, this is our 5-minute chart. So that's what made this sell-off at the open very aggressive and violent. I'm pretty sure there was a lot of people just looking to run out of the door. But ultimately, the virgin point of control from a stronger period, from a larger time frame, did end up holding price up. And now look at where Tesla is. So as we're looking at this, I'm paying attention to the points of control from here. I'm also paying attention to the value areas from here. So this is of significance. This is of significance, but this is also significance. If Tesla was to clear this area right here, price is naturally going to want to increase. And this would be our virgin point of control for now. So if Tesla was to come back to 750, it's more than likely going to be a decent buy, especially if you're a day trader. Stop loss can be right below here. And lastly, let's just go back to a larger time frame. I'm going to point out something. Before I jump to Roku's the last individual ticker I want to point out, I want to just show you guys how this looks on the SPY. If you're not comfortable looking at futures charts, you can also look at the SPY. Similar situation right here. You can see here goes our previous virgin point of control, and this is where price sold right off to. So if you guys had this up, you would have already been aware. And this is not using, moving averages or simple moving averages or any fancy indicators. This is strictly looking at volume and drawing out your own supply and demand zones manually. You're going to get a lot more of a really good feel for the market and what's going on if you spend your time when you're doing your technical analysis looking at virgin points of controls and looking at value areas. So I would encourage you guys to use just this study. You can actually even turn your candlesticks off if you wanted, which would look something like this. But again, you see how nice it is not having any distractions on the chart, how easy it is to spot support, resistance, supply, demand, your points of control. As we can see right here, this is if this virgin point of control was drawn out on your chart as the market was selling off. There's no fancy indicators on the chart. The volume profile is allowing you to go in and manually put in your supply and demand zones, and then you can turn the study off. I do not encourage you guys leave this study on, all your charts. It's not something, just have one screen dedicated to just this. Spend your weekend analysis, or when the market is closed, you can analyze the charts. This is what I use when I'm analyzing the price action for the past month or so, and it allows me to really focus in and see. And this is how it's easy to spot the shift in value right here. So this is another way of seeing it. You guys can see, as long as these points of controls remain higher than this area, I'm not really worried about the market. Even if we have some sort of a harsh sell-off, I'll be looking to buy the dip unless proven wrong. If we have a point of control that closes below this area, that's where bulls will start to get pretty nervous again, and we would probably look to target this previous point of control right here, because this is our next virgin point of control. So jumping back to the chart with color, you guys can see how already pretty crazy this probably looks to you in comparison to this. It's so much cleaner. But if we just focus in on this for a second, I want to wrap up with one ticker that it's a trade that I actually opened up today, and just want to explain to you guys the thought process. So this is Roku. Here we are, same study. I want you guys to spot the virgin point of control in this chart, because at this point you guys should be able to see this right here, guys. If you just come back and look at this and look at this right here, you can pretty much see, was this point of control touched? And guess what, it wasn't. So this would be our most recent or this is the oldest point of control, virgin point of control in this chart. So I'm going to draw this out right here. Going to do the same thing. Let's just change it to be the golden color so we know it's our point of control. We're going to call it VPOC for virgin point of control. It's no longer a virgin point of control because you guys can already see what happened on the right hand side right before I zoomed in, but there's our VPOC. Next, let's also draw out our zone over this value area, extend it out right here, and let's turn it into our demand zone. It should be green. Lower the opacity, make that very light. Let's put it at like 70, lower it, and there we go. All right, zoom out. Let's activate this for a second and just extend it all the way out to where price currently is. Let that go. Let me just come back, make sure. So I'm pretty much, we'll say I'm covering the whole zone. It's a little bit off, but for the purpose of this video, let's zoom in now. Let's go to the smaller time frame and actually check and see what happens. So back to our 30-minute time frame, you guys can see what's going on right here. Where did Roku sell all the way off and then ended up ultimately stopping right at this virgin point of control? It did wick below it, but then price came right back in as buyers knew this was a value area. Anything below this on this sell-off was pretty much a no-brainer to buy. If we dial it down a little bit more, let's look at the intraday 5-minute time frame, see how price traded. As the buyers came back and defended this level, price ultimately ended up rallying before it sold off the next day, came right back down to this version point of control. Also came to the previous day's version point of control. As you guys know, at this point is very significant. We sold off, we came back, got rejected, but then where did we get rejected to? Came right down to this previous virgin point of control, which is no longer virgin. Again, I'm repeating myself, so hopefully you guys got this. This was once a virgin point of control. It was touched right here, so it's no longer virgin, but then that proves that buyers were here to defend the level. So this right here, the combination of buyers defending this level right here, the combination of how this demand zone is being defended is intriguing to me, and that's actually why I opened up a swing trade on Roku today right here. And what I'm doing is I'm targeting this virgin point of control right here, right up here. My first take profit is going to be the lower end of this value zone right here, because I don't know when the supply is actually going to kick in. It could end up kicking in a little bit early, but my final take profit will be right here, and I'm pretty much targeting 330 on Roku. And this is where the trade idea kind of comes from. It's understanding this right here was the last key ingredient. So necessarily I didn't quite catch the dip, but I waited long enough to make sure that there were buyers actually in this area defending it. So I'm buying above this point, previous version point of control from the larger time frame. I'm buying in this demand zone, and I'm buying after there's proof that buyers are also here. So I'm not the only one that thinks Roku is of value down here. And then lastly, we can see the increase in the value between the 2 days. So I'm expecting a gap up at this point. If we don't get the gap up because of market conditions, there's different ways in which I can treat the trade. You can use this as my stop loss and break down below it. This can be my stop loss. Below this wick can be my stop loss, depending on the time frame in which you're trading. If you're looking for a much bigger reward on the trade, having a stop loss below here is not bad either. But for me, because I'm only targeting 335 as my max target, 330 as a target from my risk reward standpoint, I'm probably going to take my stop if we get back below this area right here, depending on how the market opens and what it's looking like after the first 15 minutes of tomorrow. I would ideally want to see buyers hold this level up, which is today's point of control, during the dip tomorrow. And if we dip and I see that buyers are actually holding, that's actually where I'm going to scale into my next piece of the trade. So let's just zoom out, go back to the 30-minute time frame right here, and we'll conclude on that. So guys, hopefully I packed enough into this video, but not so much that it confused you. And I wanted you guys to see it on, it's mostly you want to start with the ES. It's the most reliable thing whenever you're looking and plotting your volume profile and you're looking at points of control, and it should bring context to as crazy as the market can seem at times. Just pulling the ES back up, since we did start with the SPY, I wanted you guys to see what it looks like without all the colors of the candles. Again, this is very easy to see. You guys got that? And right now, new session has started. So if price is over this level tomorrow, over today's point of control, that's going to be very important. Obviously, if price pushes up to this, the sellers are going to try and defend this level and push it down. If they can't, the next level for them will be here, and then this level here. And if that breaks, then we should have a nice clean run back up to 4,500 sometime, if not tomorrow, which is Friday, early next week. And then lastly, if this level breaks, we're probably going to get a little bit more of a sell-off, and we know where to target as the next demand zone to potentially get the next dip buy. There'll be a link in the description to a book to read. It was one of the first books. It was a great book that I read in the volume profile. I thought it was very simple. It's a good introductory level one. And then there's the link to this TOS study and the link to my Discord. If you guys have any questions, you guys can contact me there, as well as leave any comments in this video. If you thought this was very helpful, please make sure to share the video, hit the like button, subscribe to the channel. Expect to see a lot more volume profile content on my channel. Last year, I used to put out a lot of volume profile based content when I showed all the futures trades I used to take. I've been trading a lot more option strategies this year, but my core in analyzing technical analysis is based around the volume profile. It is by far my most favorite thing to look at because it's non-discretionary. It's not based on opinion. Everyone knows, algorithms can read it. Machines know where virgin points of controls are. They're programmed to buy at those levels. They understand standard deviations. Professionals use it. It's not something that I'm sitting here and I have to draw a million different lines on my charts. All I have to do is just wait for the strongest zones or levels on the charts, and you get much higher quality trades. So guys, I really encourage you to do this. And again, hit the subscribe button, share the video, and I'll catch you guys in the next one. Peace.